I'm joined by James Bevan. He's Chief Investment Officer at CCLA Investment. Thank you so much for joining us. So what are the concerns at the forefront of your mind right now with regards to BP?
It's the very uncertain nature of the US political process and exactly what level of punitive damages and claims may be made against the company. I do think the company has extremely good quality assets and a robust balance sheet and immense cash flows and revenues each year, but nevertheless, in terms of the valuation of the company, the big uncertainty is exactly how much they're going to have to pay up.
I mean, this is the problem, isn't it? Because BP has now recently said that the cost of its response to the Gulf of Mexico oil spill has accelerated to reach $2 billion. So that's about $33 million a day, compared with the $30 million reported in June. What does this mean for the company and for investors?
I think they've done a good job, perverse. And you might say, isn't it negative they spent all this money? But actually, I think that their share of the clean-up operation ultimately is somewhere between $5 and $10 billion. And what we are seeing is strong evidence that BP has waded into action early, is doing a great deal to sort out the problems. And I suspect that the problems will go away rather earlier than some people suspect, not least because this is a very light crude. It's not a heavy crude, and therefore it will be dispersed by the waters. It will evaporate in part.
But there is still a great deal of concern about the environmental damage that it's caused, which is on an unprecedented scale. But what does all this mean for your holdings in BP?
Well, I think there are three issues that we ought to talk about. The first is, what is the long-term prospect for BP's dividend stream? Because many investors are holding BP shares precisely because they anticipate that BP is committed to a progressive dividend policy. And I think they will go back to paying dividends on an upwards trajectory next year in scale. And therefore, I do think that BP will return to being a high-yield equity in the conventional sense of the word. The second issue is what's happening to BP as a company, and there I see the programme of divestments they're talking about as absolutely critical in ensuring that there is long-term value maintained in the company, underpinning what I believe is the fair value share price of around £5.50. The third issue is, what is their claim to stewardship? Where are they on the ethical agenda? And if it is demonstrated that they are reckless and they are not taking the appropriate action, then investors, quite rightly, will expect to see serious action taken by the board with potentially a change of chief executive. I think that we're a long way from that, but necessarily we need to be asking those questions now.
But last week the company abandoned its $10 billion a year dividend. Was that the right move? I mean, could BP afford to suspend dividends in this situation?
Do you know, I don't think it had any choice but suspend the dividend, given the amount of political pressure that was being heaped upon the company. So we had a very large number of entities in the United States saying, look, guys, take it seriously.
But then do you think
it's
fair that then shareholders were stuck in the middle and were, well, being penalised by this political row?
Well, it's a very interesting question that BP has to wrestle with, and it has always said that it is attempting to triangulate between three issues. One is the strength of its balance sheet, which I think is very robust. The second is the long-term returns to shareholders, and the third is the dividend. And here, I think that the board has taken a very balanced decision between cancelling the dividend for the year ahead, but also recognising that that should support underlying shareholder value, and of course the share price has moved up since then.
You said you were concerned about the costs of the spill, but at the same time you're saying that you're confident with regards to the long-term prospects for the company.
Absolutely. We need to separate out what is reasonably easy to forecast and to analyse, which are the ongoing activities that BP has, the strength of its reserves, its technical competence getting oil out of the ground, the refining margins, and therefore we can put reasonable clarity on the table in terms of those numbers. The bit that we don't wholly understand is exactly what punitive damages the US government will require and what sorts of cases will be sustained in the courts. And those are the big uncertainties. And I think when we get early closure of that, then we would see the share price move materially higher.
Well, James Bevan, CIO of CCLA Investment Management, thank you so much for joining us. We appreciate it.